Right, ladies and gentlemen, dear trader friends, welcome to another trading example. This time I'm showing you a wonderful setup that I found a few minutes ago on the GBP versus the US dollar. And as you guys can see, I'm still in the trade. My cockpit is managing my position already in break even. I wanted to go over the setup and show you how things played out and how I did trade this setup. So first of all, we always start with the DCCR, and the DCCR dashboard already was indicating me here a few, like I would say an hour ago, but let me go check when exactly I already closed the trade on this pair. You can see it here. You can see two buys over here. And this was the first trade that I placed. So it's like, yeah, almost an hour ago. It's like 40 minutes ago that I was placing this trade. No, closing this trade, sorry. And I was opening up exactly at 11. So New York opened for me at Cyprus time. So this is when I already saw the DCCR highlighted on the dashboard. So 1 hour of managing, but this trade popped off pretty quickly. So what did I do here? Well, first of all, 1 hour ago, I saw this wonderful rally to the downside on the 2 minute time frame actually. Let me put away all those volume profiles first. I'm also going to go about these so you know why I actually put them on there. And you can see the Fibonacci here, which I can delete for now as well. But you can clearly see when you see something like this, this is a strong impulse wave that didn't really have a correction to the upside, right? Like you can see it just plummeted down, right? And you don't see any counter, like any strong counter correction up. So this indicates we are due and it needs to come. All right. So you can see it's all like shallow going down, stronger going down, then shallow. Like you don't see a real correction to the upside. When you see something like this, the strongest one that you can see is here. But this is a very small distance. So this is like, you can measure it actually from the top with a Fibonacci and see how much percent that is. And you go to that green circle here. There you go. And you have the 0% here and the 100 on the top. And then you see it went from up here, it went down to this green circle and then it went up to this red circle. This is not even a 23% correction. So all the way, no matter which anchor point you would take, you would never actually see beyond 23%. Like this correction to this red circle over here is like not even 23. So the real correction, while it was plummeting down, and I didn't see this green candles over here because I only saw the orange, right? I only saw the red candles here. I didn't see it yet. So I was expecting a move. And now we have to time when to actually enter. And we will never be perfectly right, but you can expect the markets to move at certain levels. So what I do is I use volume profiles in order to draw some levels where the markets would most probably react. So for that, I'm using in the navigator on the indicators, and I can also give you this indicator if you download it from the membership area. If you load this up under inputs, I like to make it day or weekly. If I'm on the low time frames, as you guys can see right now, I'm on the 2 minute time frame. This was a 2 minute time frame setup. So I don't go on the weekly. If this is a swing trading setup on higher time frames, such as 30-minute time frames, hourly time frames, then I go on the weekly. But for this one, the daily is completely fine. Then I bump this thing up to like, let's say 15, and then I click OK. And then you see all these volume profiles where you see where this yellow box always represents the highest volume of the day. Okay, this is the POC. All right. So now I actually zoom back and I go, for example, I go on the 2 hour time frame and then I zoom in. If you don't see the volume profiles anymore, you can click refresh and sometimes they might pop up again. If not, also changing time frames sometimes might help. And then clicking refresh. Sometimes it helps, sometimes it doesn't. This indicator isn't perfect, but it does the trick. You need to play around with it a little bit. So right now I deleted it and I will reload it to see if it actually will work. Let me see. Yeah, because we have so many things on here. That's why it might have its difficulties to load up properly. But there you go. Now we can see all the POC levels on the 2 hour time frame. You might just re-add the indicator to see the levels. So what I did here is now on the 2 hour time frame, I see the bigger picture, right? You can also do that on the 1 hour time frame, on the 4 hour time frame. But if you trade on the minute time frames, go higher, like go on the hourly time frames to see the bigger picture, zoom a little bit back, see those volume profiles. And what is interesting for me, well, first of all, spot the DCCR that actually is the one that we are looking at right now. So for that, if you want to make it easy, you can go down on your DCCR time frame, which is the 2 minute for me, and just highlight the whole DCCR from top to bottom with a Fibonacci. Okay, that's why I had a Fibonacci. Fibonaccis are very good in order to identify the whole impulse wave, because this is the only wave you want to be trading. You only want to be trading the impulse wave and its correction of this particular impulse wave. Nothing else matters. Only this impulse wave. We are only trading here inside of it, and we are expecting a correction to the upside. And then you go to the 2 hour time frame, and you will see that the Fibonacci is now showing you here, and you can see the DCCR on the 2 hour time frame actually only has a few orange candles, right? So, but now you can see it is highlighted, and this is important. And now let me try to get those volume profiles again. Okay, I clicked refresh, they popped up again. That's very good. Now I can zoom in. And what is interesting now, what is important is you need to like zoom in because you see the end of the Fibonacci, which is the end of the impulse wave down below here, right? Down below here, here's the top. So this is actually the range we are talking about that we are in right now. Down below here, what was important is I'm marking POC levels now that are below this area or inside this area. And as you guys can see on the left-hand side here, when we look in the past, we can see a strong POC level here, right? And that's why I drew a rectangle over here, a blue rectangle, right? I clicked insert, objects, and clicked shapes, rectangle, and then I just drew it there. Yeah, I just drew it there. You can see it's aligning the yellow, it's aligning with the blue. And then I did the same with this POC level down here. There's another volume profile where I just dragged the rectangle to the future. So I have two levels now where the market might react. And look, guys, what happened. The market plummeted on the 2 minute time frame. The market plummeted here down below. It went down, 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 down. And then we had like 2 or 3 victors down here. And the victors actually, like I started to go in here actually too early. Here, where you see the blue arrow, there was no victor. So I entered here a position. And then I had my blue box ready where I entered another position exactly at that blue box, and a victor occurred exactly at that blue box, and I got notified and just entered over here manually when that victor occurred because it was inside that level and we had a victor inside that level. So if it aligns victor with a POC level that you drew in, that's a very, very strong signal that the market might react there. Very, very, very high probability. Now, then you might ask yourself, okay, but where do I put my stop loss? Okay. So for that, I'm usually going like I'm scaling into the trade. So for this trade and this trade, this is the POC level that actually matters for these two trades because they are in or above the POC level for this particular first two trades. So what I'm doing is I put my stop loss below the POC level, okay, below the POC level. So if I go back to the 2-hour time frame and click refresh, and hopefully we will see the profiles here. Here you see the POC level. So I like to have my stop loss for these two down below here. Yeah, I have a hedge. You also can have a hedge. I like to hedge very much. I'm hedging right now. You can see that. You can see I have a buy and a sell stop on my cockpit. So here was round about my stop loss. It is below the POC level. The next level is, here is where I would have my hedge or my stop. And there I would re-enter positions and have another hedge level below the POC. Yeah. And usually, typically, I do that where the volume of the volume profile is lower. Okay. You don't want to have it where there is a lot of volume. The bars are far forward. So here we have lower volume. And that's why it's good to have the stop loss there. You could also have it below here because there we have a small bar of volume. So you could also have it like here. And that's still below the POC level. So that's also a good stop. But there is no perfect decision. Yeah. Just keep in mind, the tighter you have it, the more often you will get stopped out. The more far you have it, the more safe you are. You have to give the market a little bit of breathing room, right? So I had it here. And then I used the position sizer, which is another expert. The position sizer here, position sizer. Okay, so I'm going to minimize this. And I'm going to put the position sizer on. We cannot. Okay. So yeah, that will it will delete the cockpit. You cannot overlap them. Here's the position sizer. Let me just show you. So the position sizer shows you the balance. By the way, I opened this account on my first trade was on the 1st of May. So we have 2 trading weeks now. And I started with $2,300 and now I'm sitting at 4,000 on the small account, showing you that you don't need a lot of money in order to trade and make money. All right. So now what I did is, here was my stop. So the position sizer gives you the stop loss, which is the green line. And I put the stop loss where I want my stop loss actually to have. So this was at this red line here. So I just overlap it. And then I click on, instead of instant, I click on pending. And then you have a blue line. This is where you would enter. So because I already entered, and you can see my entry on this green line here. So I need to put it there. And then you can actually see how much it tells you to risk. Now you can see 1% tells you to put a position size of 0.24. Now I didn't risk 1%. Because I have a small account, I'm willing to risk way more. So I had like $3,500 at the moment where I opened the position. So I was willing to risk like $200, $300 So you can also risk the absolute amount here. So if I risk like $300, then you can see the position size is like around about 1.77. Okay. So I risk probably like my stop loss was maybe a little bit higher like this. And there you go. It's round about 2 lots. And this is exactly the lot size that I was putting. Like I was putting 2 lots. Okay. You can see in my history here. There you go. My buy was for 2 lots. My first buy. Okay. And this was the buy that I placed here. Okay. So here's my first one on this level. It's on this level. Okay. And I opened this trade too early and I didn't really meet the criteria which you actually need Victor and the poker zone. But I was willing to scale into the trade and place another anyway if it dips down. So I'm not scared to lose this account because it's a small one anyway. And I'm willing to go a little bit higher risk. So I'm okay if the account gets dragged down by $300, $500 because I'm having 3,500 and I'm fine. This is just, yeah, this is how you should also go about it. If $300 is way too much for you, well, then go lower. Then go like with something $100, $150, whatever you like to be comfortable with. You should be comfortable with it. And I mean, with comfortable, I mean, if your account is $300 in the negative, would you be nervous about it if you have a $3,500 account? If not, fine, then you can do this and it's completely fine. And then you just set up your stop as I showed you here below the POC levels. Yeah, or above if you have a greed DCCR. And that's basically it. And then I placed the trade with 2 lots. And this one over here had a 3-lot buy. Because this one was way closer to the stop. Yeah, so this one was way closer to the stop. So I was willing to put my risk and ramp up my risk higher. All right. So this is how I did it. 2 lots over here, 3 lots over here. And then I had 5 lots protecting me down below here. Okay. You can also put a stop loss for both of them. And then what I did is just like it was minutes. Like I opened the trade at 11:03, 11 o'clock in the morning, 11 a.m. and 3 minutes in the morning. And I already closed these worst positions when there was a Victor showing to the upside. It was like a few minutes. Yeah, like 20 minutes or something. You can see it here. I closed it at 22. So that's like 20 minutes past. And then I had a Victor to the upside, a spike. And it spiked round about the 23 level. Yeah, and also we see a lot of green and red circles over here. Yeah, you see that, the green and red circles over here at that level. It's a lot of green and red circles. So we formed a red circle and a Victor inside this cluster zone here. And that's why I already closed my worst position. And you can see here, I closed it with a profit of $300. And I already also closed a part of my 3-lot position also here. So from these 3 lots, I closed another 1 lot, leaving 2 lots open. So right now, I have 2 lots open on the GBPUSD, and I leave it running for going further up. And how do I decide? Because now if we look at the volume profile, we can see the high volume nodes are, for example, here. Here's one bigger one, right? This is one big bar. This is very, very high volume over here compared to those others. So this is high volume where the market might tend to gravitate to. So this might be a level where you can take profits. And my absolute take profit level, depending on the structure, would be at the POC as well here, which is the yellow box right above. We are down below here. That's still a long way to go. But you want to also gradually take profits, right? So this is the first station over here. And then we have low volume. If we break this level, we have low volume, we will probably shoot up. And then we can aim for this level, for this level, for this level, like these three stations. But probably I would go for this and this. This is also around the 50% Fibonacci. And this is a little bit higher, right? So this is the highest volume node over here, and this is where I would like go for full take profit. But you can also go, if you don't want to do that manually, obviously you can go with the cockpit, right? You go with the cockpit, and what you can do is I'm just trailing my buy and it moves with the market. So you can see if I zoom in now, you can see if I zoom in now, it actually moved my protective stop here because we have a green circle and it moved it higher. Okay, so I'm already in profit. If you don't want to trail it, yeah, and don't protect it, but if you have to go, for example, you could do that and protect it. And I actually have a weighted protection. So this is 3 lots versus 2 lots. So if this gets triggered, I actually have a sell weighting, meaning I'm actually on the sell side, meaning if it goes down, I will make profit. So I expect market, if it breaks this level, to go down further so I can even make profits if the market then breaks this level and goes down. So I make profits in both directions. But if you don't want to have a weighted sell stop, you can just modify that in the expert list, click on properties, and then go down below. Instead of hedge trailing, you click, oh no, not hedge. You keep hedge trailing, but you can also do stop loss trailing. Yeah. Then you don't have a weighting. Or you keep hedge trailing and then you put the multiplier to 1.0 and then it is equal. So it will actually adjust the sell stop from 3 to 2 so it's equal with the buy. So no matter which direction it will go, you will not lose or win money. Let's try that. And there you go. The sell stop is modified to 2 now, right? And you can also see it in the cockpit. Sell stop is now 2 versus 2 buys, meaning you have a equal hedging scenario, meaning if the market hits this sell stop, you will not lose money and you will not win money no matter where the markets will go. This is like equal to a stop loss, right? The positive side about hedging is that if the market goes down, I could close the sell. And then if it goes up again, then I still have my buy open. So that's a good thing you have more flexibility and can make more profits if you are actually good in hedging. But if this is too much for you, you can just keep it at stop loss trailing. Yeah, if I put stop loss trailing, what's going to happen is stop loss trailing. Boom. And there you go. We have, we can close the trailing. Yeah. Maybe that does not work. Trade buys. Now. Yeah, you have to delete it manually. And now you see the stop loss is here at the same place instead of a hedge. So now if the market will hit the stop loss, you will just get out of the position and you will secure the profits until here, which is $330. But for my liking, like there is no right or wrong. If you will turn on trailing, you will get stopped out more often, obviously, because you have a stop closer to the market. If you put it to break even, like you can put the market to break even. Wait a second. Set sells to break even. Yeah, I think now it's a little bit broken. You see, guys, this is how sometimes things are going. Let's see if it works now. No, it doesn't. All right, whatever. But now you can do that manually. You could put a stop loss like this and just put it break even. And that's also fine, right? So if you put it to break even, well, obviously, then you can expect to not win anything, but the chances of the market going higher and ramping up more profits is higher because your stop is more far away. That's logical, right? And you can see the market maybe likes to break this level, right? It seems to tap a third time into this level. So if it breaks this level, I can expect a stronger move up because we saw that we didn't have a lot of volume over here. So probably we can go higher and probably aim for the 50 Fibonacci while we had that high volume node showing. So this is how I traded the setup. All in all, it's pretty straightforward, but I know if you are a beginner, that might be overwhelming, but it's always the same thing. It's finding the DCCR, looking at the volume profiles with the POC levels, putting your stop losses below or above it, depending on your setup, and then just calculating the risk in order to trade. I'm using the position sizer to calculate risk because I want to do it manually because I'm willing to risk more than the cockpit would risk for me. All right. The cockpit would risk way less if you do it automatically with the cockpit. Now, obviously, you can also just put the cockpit on there and let it do its thing. It will also put in a trade if there's a victor occurring, but it will do way lower sizes, and then you cannot grow a $2,000 account so fast to 4,000 like I did in 2 weeks. That's like that will not be happening. Yeah. So because it's just gonna risk a small fraction of your account, like a few, like 1% or something. Not even maybe 1% sometimes. So I was risking, like I was willing to risk 10%, right? Or even more. Like I risk like $500, which is more than, yeah, which is a lot, right? But for me, 500 on a $3,500 account is not much. And now you can see it pushes through. And as you guys can see, it seemed to just like jump up because there is not much volume. The market always gravitates from a lot of volume to a lot of volume again, where high volume nodes are, from one high volume node to another high volume node. So let me put the volume profiles again, put it to 15 on the 1 day. Yeah, it doesn't show. Sometimes it's like that. So let's switch the time frame. There you go. 10-minute time frame works magically. And there you guys can see the highest volumes are here and here, right? The POC level here, right? This is the highest volume. So also this level here, yeah. So way above the 61 and here, like these are levels which you want to aim for. So you can also draw shapes and go like this and have your levels marked up. Now keep in mind, That doesn't mean the market will always go there. It depends on the impulse wave. Yeah, it depends. This wave was not correcting at all. There was no counter correction at all. And that's why we have such a strong move up. But it doesn't mean we will see now the whole move to the upside now. We could also turn now. We could bounce here and turn now lower. It could. So that's why it's always good to go on the higher time frames and actually look at what is the structure here. Are we bullish or bearish overall? If I zoom back and I can see we are bullish, right? We broke structure to the upside. We made higher highs and higher lows, right? So if I zoom in, this is the structure now that is going up. So we have like a bullish structure. So we can, yes, even very confidently aim for these levels that we marked up here above at these POC levels. Okay? Like this is not unrealistic then in that case that the market will gravitate here. Okay? Especially also we grabbed liquidity here on the left-hand side. Look at this. I'm going to delete the volume profiles so you can see it better. We see this DCCR here, right? Where you see the Fibonacci. This is our DCCR. And if we look on the 10-minute now, on the overall structure, you can see we had a here. Here we had, what did we have here? Well, this one, this is interesting, right? This one is the lowest point after we started with this 3-level down low here, and end of April. And then we ramped up, made this 3-level up here, and then we went down, and this was the lowest point. And since then, we rallied up. And now we made that DCCR down, and we broke this level. And the market likes to do that, break this level, trap sellers because they think, oh, we broke this level, we go down because we are so strong. We have so much pressure to the downside. So they trap sellers, and then it reverses. So they literally sold all this wave, impulse wave, to the downside in order to buy up again. They just wanted to get cheaper prices here and grabbed liquidity here on the left-hand side. So they grabbed the liquidity. They gravitated towards the POC that we saw. Again, we had the POC levels here. Yeah. It's very important also. We had the POC levels there. Yeah. Look at that on the H2. I have shown you this on the H2, right? So here. You can see these yellow boxes here, and here yellow, like here yellow, right? All these volume profiles aligning, like there is a zone where we have those POC levels. So that's why I marked it with a blue rectangle. And guess what? That blue rectangle, right, where all these POC levels align, is actually below this low of the structure. So the market likes to grab the liquidity, push, and then bounce from the POC level that was once a very high volume zone. And now it bounces back to the next volume zone, probably back up again here. Because always it goes from high volume to high volume. That's how it works. So, guys, that was a lot. I think you liked it. That was my explanation for the GBP US dollar. I'm still in the trade. As you guys can see, I have still a $560 profit open. My equity is sitting at $4,600. And yeah, $4,630. I can also show you actually the statistic of that one here. Now you can see the results of my account. I started with a $2,347 net deposit on the 16th of April, but I placed my first trade on the 1st of, I think 1st of May. And now you can see, or maybe even a little bit, yeah, a little bit earlier. And you can see my account is sitting now at 4,000, like the balance is sitting at 3,500, but the equity is sitting at 4,600, right? So you will see that when I close the trade, I will be round about here, 4,500 or maybe even more, like growing from 2,300 to 4,500, $2,000 profit. Like literally, that's 100% return. Like if we go with 4,600, that's 100% return in like 2 weeks. This is insane, right? And you can see all the statistics here. And I did the same thing with the US dollar, Canadian dollar. We don't need to trade NASDAQ and all that. We just need to spot DCCRs and trade it with the help of the volume profiles, with the help of the Victor that taps into those POC levels. And at the same time, calculate our risk with the position sizer to our liking, right? So we feel comfortable. And that's it. And then just let it play out. And if you don't like to manage it yourself, you can just use the cockpit to manage your position. And that's it, right? Because now you can see there's a new green circle, right? So it's just gonna like on the if I do it on the 5 minute time frame, you can see here is the green circle, here is another green circle. If we are gonna close this candle now, it's gonna put the stop here. It's gonna go higher and higher and higher. All right, it's gonna go with the rally up, right? But if we will see a spike down, well, obviously, then it's gonna trigger our hedge. So there you go, trail buys, and you can see we are having our protective position here. You can also put the TP track buys. So it's going to close our position if that red 3 level in profit direction will occur. And right now we can see the Victor, right? So it's not going to close with a Victor. It's going to close with a 3, like a red 3, like up here. If that is going to show in profit direction. Yeah. Yeah. So this is basically how that thing works. And this was everything. I hope you liked it. Alexander Wojciechowski with another trading setup on the USD CAD. I wish you guys happy trading and see you on the next one.